Morning. Good morning. Good morning. Happy Friday. Happy Friday. Turn my volume down over here. It's Friday. It's Friday. I'm going to get my charts up here and we're going to see what we got. I am in some trades today, ladies and gents. So let me get my calendar up real quick. Give me just a minute on that. Governor Bailey of the Bank of England did flap his lips about 2.5 hours ago. So we'll definitely touch on that as well. Let me see here. Let's get the screen shared. Window, calendar, share. All right. Here we go. So where are we at today? I'm actually going to add in all the other folders so we can get a little bit of a view from some of these other reports that aren't necessarily high impact, but they do push around the currencies, the major currencies, when kind of paired together. So obviously, again, today we did have Governor Bailey speaking here about 2.5 hours ago. So we'll get to that in just a second. But besides that, just a recap, okay, just a reminder, yesterday we did have a pretty good unemployment claims number for the U.S. dollar. Now, we got an initial spike up only to see it retrace. So we'll get an updated look at the Dixie here in a second. Good morning, Mr. Peeps. Good morning. So yeah, we'll get an updated look at the Dixie. And then as far as some of these other events that came out, the German final CPA, even though that's a yellow folder event, that's obviously something that we'd like to keep an eye on since it does affect the currency as an individual, okay, the euro. So looks like they did nail their expectations right on the dot. So we're not likely to see any big changes there. Let's see, did that affect the euro on the edge finder? Let's go take a look. Let's go take a quick look at the euro over here. Okay, so no, that one did not, because yeah, on the euro they specifically focus on the euro as a whole, but again, Germany's their largest economy, I do believe, so sometimes it can have an effect on it. But yeah, it's not listed as one of the items on the heat map, so we'll just skip that one. What else did we have? Empire State Manufacturing yesterday. That was during the unemployment release as well. Came out to be a pretty good score for the dollar. Philly Fed, same thing. Pretty good score on that. Those are more medium impact events, orange folder events. Let's see here. I think that was really the main ones. Let's see. Housing starts. Yeah, and then we got a slew of Fed speakers flapping their lips later on this morning. More yellow folder events. So, yeah, as far as Governor Bailey goes, I actually took his entire speech, which came out to be over here. And as you guys can see, this thing, it gets to be pretty wordy, pretty word salady. So I like to take all these speeches and I like to come over here to DeepSeek, or you can use Grok on X or Chat GPT. And I just like to tell it to please summarize into a half-page summary. Okay. And then I'll just paste the entire speech there. And usually it'll come out with still just too much word salad. So what I did this time was actually told it, I said, can you boil it down to half the size and simplify the wording so a third grader could read it? Okay. So this is talk by a bank leader in the words of in the speech of a third grader. Working together in a world that's pulling apart. The leader of a big bank, Andrew Bailey, gave a talk about countries needing to work together. He said that when countries trade and are open with each other, it helps everyone make more stuff and be better off. Now, see, doesn't this sound a lot more easy to understand than all the economic lingo that all these speeches, all these people do. Okay. So anyway, but for this to work, we need fair rules that everyone agrees to follow. These rules are made by big international groups where countries talk things out. Right now, this is getting harder for a few big reasons. Life is getting more expensive. Countries are picking favorites. Okay. So it's like they're picking it's like the last kid being picked at a kickball game. Okay. This is what they talked about. People are angry. Okay. Everybody's blaming other countries for their problems. So they're not taking responsibility for things. They're just passing the buck, right? Stuff that even a third grader could realize. They're losing trust in groups that are supposed to help countries cooperate. So what should we do? Make more stuff. Yeah, that's right, Mr. Peeps. Don't close doors. We shouldn't stop trading. It still helps us all. Ooh. We need to fix the teams. We need to support and improve the big international groups that help countries get along. Get ready for new tech. We should prepare for new inventions like AI and robots and help people learn the skills they need. And then finally, we've got to keep our money safe, Mr. Peeps. We must make sure our banks and money systems are strong and won't crash. The main idea is that even when it's hard, countries are better off when they follow fair rules and work as a team, okay? So that was the basis of the speech through the eyes of a third grader. And really, this speech is kind of the same speech that a lot of these other Fed governors have been saying, just reworded, right? But when you boil it all down, you put it in a half pager, and then you cut that in half, and then you send it through a third grader filter. It's basically the same stuff everybody else is saying. Let's play along. Okay. Some of them talk about climate change. They all talk about the AI and the robots taking over. Okay. So that was your speech. Now, that was at 4 a.m. So what did it do for the pound? Did it do anything? Let's go take a look. Okay. Let's look at the BIXI first, which is the pound index. Okay. That was Thursday. Well, we can't look at that yet. I guess they don't have that open yet. But pound dollar, let's go take a look. Yeah, and pound dollar, I already know, is not on the bullish or bearish list. So let's go look at 4 o'clock. Okay, that report came out right about here, right here on this candle. So there you go. We basically got about an 8 or a 9 pip bounce, and then now we've retraced back to the center. So it sounds like a dud. Okay, just sounded like a bunch of generic jargon. Okay, so it doesn't seem to me like this is going to have very big of an effect. So it's basically, let's play along. Let's all play along as countries. Okay. And let's help each other out. And let's stop blaming each other. Okay. Same things that we're taught as a third grader. So there you go. Not really much else to say on that. That was your speech. As far as top setups goes, let me get it opened up over here. Make sure my goodies are up. Okay, perfect. Top setups. So yeah, nothing's changed at the top of the list. It's all about selling the Swiss franc at the moment. The British pound having that positive GDP report yesterday actually brought it out of the cellar. Very British of him. Does not want to offend anyone. Yeah, that doesn't sound right. Aren't they pretty offensive in general? Aren't they? It seems like they use the F word, believe it or not, a little more than us here in the U.S. So I don't know. It is kind of funny to see it that way. All right. So we're selling the Swissy. Let's go take a look at the economic heat map or the eco surprise meter rather. And I'm going to turn my space heater off. I have it under my desk and it gets quite toasty. But I have to have it on initially because behind my computer is my window. So it gets quite chilly right here in the mornings. But that knocks it out. And then after a while I get hot. Then I have to come out of my jacket. So it's kind of a interesting cycle I go through when it comes to the temperature over here in the quarter. But anyway, British pound. Okay, this was in the cellar. This thing was at 0% before yesterday. Their GDP report came out. I think it was a 0.3 actual number to the 0.1 estimate, if I remember right. Yeah, 0.3 to 0.1 up here. So because of that, the pound, if we go take a look at their individual currency over here, had its first bullish report come out. Isn't that nice? Other than that, everything else was red. You had one neutral report back in mid-December, and that was it. So finally, it has a score, it has a pulse, but it's still tied for the weakest currency. Okay, it's tied with the Swissy over here at 17%, because it also is not doing too hot. Let's go take a look at the Swissy over here. Okay, they had one mid-December bullish report as well for their producer price index and a neutral report. So it's basically a carbon copy, the pound and the Swissy. Pound and the Swissy. That's probably why Governor Bailey was trying to play nice and say we all need to get along, because the currency's not doing the greatest in the eyes of the red folder events. Only to each other, but the outside world still sees us like we live like downtown Abbey. Are you in, Mr. Peeps? Are you in England? Or where? Yeah, I guess I've never really asked where you're from, man. Yeah, let me know. Be interested to know. Always like to know where everybody's at. I'm as central US gets. Maps. I'll show you where I'm at. Okay, if we zoom all the way out to the States, there I am. I mean, again, that's as central as central gets, right? Right here in the center of the country, man. My state's Kansas, and here's Kansas City. So a lot of people don't know this about Kansas City, but it's in two states. So right here is state line. This is State Line Road. Right side is Kansas City, Missouri. Okay, the state of Missouri, and most people don't know that. So I'm over here on the left side. I'm on the Kansas side, and I am down here. Okay, so if we got state line right here, I'm just over here on the left. If I drive off to the east about 8 minutes, I run into Missouri. But I love living where I'm at because I've got the convenience of the city and anything I need to go buy or whatever. But if I drive to the west, there's cow pastures and all the fun stuff Kansas is known for. So just a little bit of geography there from my aspect, which is in the UK, but a little island between the England and Ireland. Tax haven. Hey, tax haven. All right. I got you. I always like to see. I'm a big maps person, a big geography person. Oh, you're over here in Isle of Man. Okay. Yeah, I've always heard of that island, but I've never actually seen where it's at on a map. So right on. So you kind of have the best of both worlds. Well, yeah. I mean, as long as you're just out on your own, man. You got your own island. That's awesome. Man, that's one of my goals, Mr. Peeps, is to get over to England at some point, to London. I just want to go to the financial capital of the world. I've always heard that about London. Okay, we all know that New York City is the financial capital of the world, right, when it comes to stocks, but a lot of people don't know that London is the Forex capital of the world, right? So, yeah, it's definitely one of my goals to get over there to London at some point. I'd like to go and explore and all that fun stuff. So perhaps one day, my friend, I'll get my butt over there. So good stuff. Own government, but tend to follow the English government when it suits. Okay, there you go. When it suits. You get a choice in the matter. I like it. Good stuff. So anyway, back to my trades. So I am in, this is one of my demo accounts. So right now it looks nice. I am, in a couple green trades. Let me hide that out of the way. Euro yen I'm in, and then I'm in a Bitcoin trade. Now I'm in it twice because I messed up my stop loss when I got in it the first time. when I got into this the first time, and I was looking at this 4-hour demand zone with some smaller time frame confluence, I got to admit, I feel like I may have bought a little bit high up on the curve, but I do like that the zone itself was kind of in the middle, well, above slightly. Part of it was inside of this former resistance point back here. But when I got into this trade, and let me flip down to a 1-hour time frame. Okay, my stop losses are down here. Well, I accidentally put whenever I was drafting the order, I forgot to move my stop loss. Whenever I turned it on, it just automatically came down about here. So I had already put in the order, and obviously I wanted to cut my loss if it goes against me right in this area. So I ended up moving my stop loss, and by the time I did that, I basically took away. Well, it basically only gave me half the profit potential. So I waited on a little bit more of a retracement on a smaller time frame and got in a second position for the same half to cover the other half of the total risk I was trying to do. So that's the only reason I'm in it. I got two take profits up here at the top, stop loss underneath the demand zone itself. But I also kind of took into effect this little wick back here. So, rather than put my stop loss in this area like I normally would have done, I just went ahead and took this little wick into account. This wick had also bounced into a demand zone. Okay. So that's my line in the sand on Bitcoin. And this is a trade I'll be happy to keep open over the weekend. Okay. Since Bitcoin runs 24/7, right? So we'll see how that goes. It got initial bounce, but yeah, it's just kind of died off and went sideways. So it's really gotten kind of boring since I got into this trade yesterday before I went to sleep. But if I drop down to a 15-minute time frame and we take a look at where my entry was over here, okay, so that white line above is the 1-hour demand if we were to be on a 1-hour time frame, but now we're on 15, so this is my 15-minute demand zone. So there's my candle right there with a big giant spike up. So as far as I can tell, I passed all my rules. Zone inside of a zone for confluence. Break a structure over here. And it doesn't look the greatest when you're looking at Trade Blocker, which is this platform. But on the other platform, on TradingView, the volume looked pretty good at the formation of this demand zone. Do you do any fundamental analysis on Bitcoin? Is there anything to look at in that regard? Man, I just follow whatever's on the top setups for for the Edge Finder. The Edge Finder, from my understanding, pretty well does a similar thing with Bitcoin as it does with gold and silver. So it's a risk on asset. So the stock market, the U.S. stock market, is a risk on asset. Okay. So in a way, a lot of these parameters kind of go into the Bitcoin field as well. Bitcoin being the number one cryptocurrency as far as I kind of look at Bitcoin, and I think most people do. I'll be honest, I am not a crypto expert whatsoever. And the only reason I really trade Bitcoin is because it's on the Edge Finder. But this was more of a technical play for me. It was not anything to do with the Edge Finder, because the Edge Finder, if I remember, it's actually giving it like a -1 or even a 0 score. So it's neutral. But every once in a while, I will break away from the Edge Finder if I feel like the technicals looks pretty dang good. So when it comes to Bitcoin, I just thought the technicals looked pretty dang good as far as the chart itself. Okay. So again, we have the demand zone created right at this resistance line over here, this former resistance, with a big spike up, and we had gaps on all the lower time frames. And like you see down here on a 4-hour, okay, there's your 4-hour leg out volume down here, or volume spread, so trading activity. So dropping that down once again to the 15, okay, over here on the left, there's your 15-minute candle. And then you had just several green candles, expanded range candles coming out with the most important, well, one of the most important things is the fact that the volume was growing as it was going up. So this right side of the U-shaped volume, okay, this is basically what I was looking at. So I got to be honest, I did not pay it. I mean, I went against the grain from the Edge Finder point of view, but this was strictly a technical play. So as always, small risk on these types of trades. My full risk trades only come when the edge finder and the technicals match up. So yeah, I mean, I feel pretty good about it. And not only that, if you're looking at range, okay, well, even if we factor in the 1 hour candle, okay, because the profit range is huge on the 15-minute time frame. But if we measure from the top of the 1 hour candle to the bottom of the zone, what is that, 327 points? We go clear to the top up here, and what do we got? A bunch, right? 3, 6, 9, 12, 15, 18, 21, 24. So that's about an 8-to-1 reward risk. That's one of the biggest reasons. And again, even if we isolate it to just the 15-minute, okay, it's going to be even bigger. So that's 200 points. Yeah, that's about, I mean, you're looking at a 10-to-1 reward to risk, right? So that's the biggest reason, was because of the profit potential. If that profit potential was only a 3-to-1, if it was only a 2-to-1, if it was only a 4-to-1, I personally would have just skipped it. But because it's offering, okay, it's not saying it's guaranteeing, but because it's offering that profit potential, that's why I decided to hop in. So yeah, we'll see how it works out. And not only that, I'm not forced to close this trade today. Okay. So yeah, it's a little bit, I would say it's a little bit on the riskier side, but this is just where I got to rely on my experience with zones. I mean, with technicals, just to see if it works out. So, at the end of the day, we can't win if we don't get in, right? I haven't had a great week. I think I'm only down like $60 on one account. And what am I down on this account? This is full transparency for you. Okay. Yeah. So I did drop back below 250. Okay. So yeah, this was a loss I had yesterday. This is my first loss in a little bit. Okay. So I had the Japanese Nikkei. I got into this trade yesterday. We'll take a look at this chart in a second. Well, actually, let's just take a look at it now. So when it comes to the Nikkei, just a recap, it's given us a bullish 7. Okay, so it's a bullish bias. When we go into the trade itself, let's just get that out of the way. I started off on this chart with a 4-hour, or was it a 2-hour? Yeah, it was a 2-hour. Yeah. Okay. So I'm going to be honest. I broke my rules on this trade. Okay. I liked the demand zone. Okay. It gave me a 2-to-1, but it did not break a structure. Did it not? So this is a slap on my wrist because I did not follow my rules. But my thinking on this trade was score, number one. And also the fact that we kind of had this little bit of a dynamic support. And so I was just basically playing this like a support resistance trade from here to the top is all I was really trying to get out of it. But as you can see, and the other thing too is I got my stop loss way too damn tight on this thing. Okay, it got me out there. I should have given it a little bit more breathing room. Now, it very well could still continue to come down, but yeah, I'll be honest with you, man. Not my best trade. Not my best trade at all. I had been on quite the roll, and I go through this every once in a while. I'll have quite a roll where I'm rolling and just everything's just winning and winning and winning, only to turn around and skip a rule here, there, and then turn around and have a loss. Okay, sucks. But sometimes, and I'm bad about that. For the most part, I have it nipped in the butt. But every now and then, my head will get a little bit big because, again, I've had those X amount of winners in a row, and then I'll just skip a rule. So I skipped my rule about breaking structure. It did not break structure. Okay, so this is on me. This is a -1. And not only that, look over here. We had a supply zone. So the one good thing about losing a trade is my gut, your gut, everybody's gut at some point will immediately know why you lost, right? So for me, when I lost this trade, I immediately knew it was because it bounced into a supply zone. The supply zone caught enough of a ask to drop it back below this little this little swing low. Okay. And then, yeah, the volume wasn't the greatest. So yeah, it was just a bad trade all around. But so there's your transparency bit for the day. But on to the next one. That was just one trade, right? Going back into my trades, though, we already went through Bitcoin, Euro, Yen. That's the other one I'm in. And I did like this trade. Okay, we had a little bit of a head and shoulders pattern happening over here. Now, it very well still could go all the way down to the beginning, right? But when it came to this trade, let's see here. What time frame was I? 2 hour? I think that was also a 2 hour time frame. Yeah. Yeah. So we're just looking at this area here. It's going to be somewhere around the 61.8 for fib traders out there. Okay. I just eyeballed that and just looked at it from that point of view. I don't know. Let's see. I could have been off too. Yeah, 61.8-ish. Okay. Just slightly below. Banks also do like to sweep liquidity under 61.8 levels just because they know how many people buy at a 61.8, right? So this is a potential liquidity sweep from that point of view. But from my point of view, it's I was basically looking at the zone itself. And then I do believe if I step that zone down, you see the white lines in there. So I've got a couple different time frames of confluence. This would be your 30-minute. And then this line, this bottom line is a 15-minute. So when it came to those, that was offering me up about a 2-to-1 before it got lazy. So probably not the best trade on this one either, to be quite honest with you. I mean, I did like the positioning of it, and I liked the score. Guys, there's so many zones where I don't take the trade that end up winning. And then I always smack myself like, dummy, why didn't you take the trade? And a lot of it is because I am so strict on these zones. But yeah, I just had a little bit of not my best performance yesterday, I got to say. Right? Now, this one currently is doing okay. The Bitcoin's doing okay. But yeah, let me just say this. I've had better weeks. But I had a small win early in the week. So with this loss overnight from the Nikkei and these, yeah, I've had way worse weeks. I can tell you that. So anyway, that is that. So as far as, let's see here. And by the way, we do have Dow and NASDAQ back on the list. So let's go look at some indices. That's where I've been making all my money, to be quite honest with you, has been the indices. I've been doing really well over there. Stepping out into the Nikkei, though, that's one index that I haven't traded a ton. So it was just nothing more than a filler trade. Okay. Really, all the trades I made last night. I didn't follow my rules, but I also was at least smart enough to keep my risk down, right? Low risk, high potential, right? So the low risk just won out as far as not hitting my zones and bouncing immediately like I expect them to do. So Dow +5, NASI +5. So let's go look at those real quick over here. Scared to enter in case it goes wrong, but then miss so many trades. Yeah, that's it. That's it. It's kind of funny because that'll happen to me because of how picky I get. And then every now and then, like yesterday, is just one of those days where I'm like, F it. And then I might skip a rule because I'll know, well, the trade that I was just looking at looked similar to this and ran off without me. So I hop in and then I'm like, you dummy. You ignored one of the most important rules that you have in your own trade plan that I wrote up. And that was break a structure. So such is life. La vie. NASDAQ. What's our 4 hour looking like? Okay. 4 hour time frame. We're following this trend line. Now we haven't really broken this structure yet over here to the left. If we can break that structure, then some of these zones will look a lot better. But in the meantime, what do we got right there? Okay, so this looks like a nice demand zone right here, this red candle. But the problem is there's no volume. There's not a ton of trading activity that occurred. So even though that looks nice and we had a big gap out, we had an expanded range candle. And then the second candle continued from there on out. There just wasn't a ton of institutional activity. And that's what I like, is institutional activity. Okay, remember the red and yellow candles typically are coming from the big banks, the big boys, right? And then everything else in the middle is just where the retail traders are typically playing. Banks like to put in their positions early, man. They come in about an hour and a half, typically before the market opens. When the 7 a.m. for me, that'd be 8 a.m. New York City time. That's where they're doing a lot of their fundamentals. That's where they're doing a lot of their prep. So they start getting some of those early positions in. Market hits, bam, there go the trades. So anyway, yeah, smaller time frame is where I was finding this demand zone here. So we're looking at it here on a 2-hour. Now I'm very hesitant about this one because the volume was declining as the price came out of the zone. Okay, the trading activity was declining. So this is a confirmation entry all day long if I were to take it, but I already don't like the way it's shaping up because we couldn't even break a new high from this leg. Okay, breaking this high. So yeah, this is what you call it. This is as strict as it gets. Break this structure here and then retrace. And then even on a 1 minute, 2 minute time frame, after bouncing into this new zone, we're still looking for break of structures to the upside. So that would be the play on that. But this is probably going to be my least favorite. Down below, I think that's say another 1 hour. Yeah, let's go take a look at this 1 hour zone. So this is at a blue dash line, which means a former support or resistance line on a higher time frame. Okay. Yeah, this is the one we drew up, I think, the other day. So it has a very tiny gap. Okay. That very tiny little white rectangle. That's our gap. Do you think that's going to get me out of bed for that odds enhancer? Probably not. The volume, though, okay, it took place kind of at the end of when London closes, when it's on New York by itself. So the volume was still pretty good. And that was the whole reason I liked this. I did not like it at all because of the gap that it left, but I liked it because of the volume. And I also liked it again because it was a former higher time frame support resistance line. If I scroll all the way to the left, okay, we're basically looking at this area here, this area here. Okay, some of these lines here, we wicked in here, we wicked up here, and then rejected. Okay, there's one here, kind of one there, I guess you could say. So yeah, it was a pretty hot spot on the chart. Okay, 25,250. It just so happens to be a lot of bounces. So that's one thing I like is, typically when you get some of those higher time frame support and resistance lines tested, the banks know that. So if I'm interested in this area, I know this. When price comes into the line, okay, a lot of people are buying here and they're putting their stop losses down below here. So if I'm a bank, I don't want to reverse price right on that line. I want to push it a little deeper to collect these stop losses. Oh, by the way, collect these unfilled orders over here from the demand zone. Okay, so that's just my thinking on that. Going a little deeper, assuming that we break through this first alert that I have over here. And yeah, that's basically the play on that. A 1 hour time frame. Down here, we had another demand zone form, but again, it kind of formed in a quiet period. Okay, not a lot of volume there. That was an Asia session formation for the end of it, the end of that demand zone. So anyway, oops, I didn't want to do that. So anyway, that's NASDAQ. I think it's probably on the back burner. Yeah, I'm sure we'll find some better setups. Today is Friday, so on Fridays I tend to stay the hell away from 4 hour zones because I don't like holding trades open over the weekend. Although the last couple weeks I did hold trades over the weekend and made money off of them. So I don't know. I'm kind of torn on that. I used to hold trades open over the weekends all the time until we dropped the bombs at Iran's nuclear facilities. And I came in Sunday and I had a trade open over the weekend. And my trade whatever trade I was in, I don't even remember what it was. Actually, when the Sunday open happened, because it opens on Sunday evenings here in the US, when it opened, my trade just took off in my favor. And I liked it, but I also recognized I got lucky on that because it very easily could have capped and when it gets me the other way beyond my stop loss, right? So even though that benefited me, I knew that it wasn't skill. I knew that that was just luck. So from that day since, I just been making sure all my trades are closed over the weekend. We all know how a tweet or a Truth Social post from the president can move markets wildly. So it's just gotten a little less appealing to hold trades open over the weekends. But having said that, the last couple weekends I did, and it just so happened to work out. So I don't know. I feel like part of me is probably playing with fire just a little bit. Now, they weren't the most volatile assets I held open, but still, all it takes is just one big crazy thing, especially with Venezuela and Ukraine, Russia, uh, you know, Taiwan, China, obviously North Korea is still up there. Anytime the president or somebody's threatening to shoot or bomb or whatever, and now we got Iran. Okay, we got a lot of geopolitical fires right now. Iran up there terrorizing its citizens. So from what we hear, okay, now we all know that the news says what the news says. We don't know what's right, what's wrong. So I'm only going by what we hear in the news. But it just makes for holding trades over the weekend just a little bit scary. So anyway, I went off on a tangent on that. But so yeah, but for the NASI, let's see, we already went through that. What was the other one? The Dow. Yeah, let's go look at the Dow. Okay, the Dow is down here. I like this structure a lot better. And I'm also annoyed. This is the trade that I missed out on Wednesday. I don't, for the life of me, I got distracted during this drop into this demand zone over here. I mean, this is as beautiful as it gets. Okay, the leg out volume was great. I think my only hiccup on this was the fact that when we did get up here on this demand zone, we didn't break the structure. Okay, see, how about that? Follow my rules and then miss out on a trade. What we got? Bitcoin. That used to be one of my problems. Yeah. Oh, yeah. I was just getting caught up. So, yeah. Well, anyway, I mean, beautiful trade. Okay. Demand zone right over the top of the former resistance point a couple times. I mean, that was just as pretty as it gets. So, anyway, that's a done deal. Where are we at now? Well, since that's already been used up, we just got to drop and see if we can find another time frame. Okay. This is the one I'm looking at now. Okay, looking at this demand zone here. Pretty good volume out, but this is going to be the same as this. Okay. If price comes down, I've got to see the confirmation entry, because did this demand zone have enough strength to break a supply zone? Currently not. Currently we're in it, but it does look to me like it's trying to reject it pretty hard. So if this supply zone reverses this price, do I really want to take a stab at this zone, or do I want to wait for a bigger discount? I'm probably going to want to wait for a lower zone. Now, I can't use this one because it's already been used. In fact, I need to turn the color light green because that just tells me that it's been touched, been mitigated. There's something sketchy about it. I really honestly just prefer to see a new high formed and then a retracement to a demand zone at that point. So it hasn't done it yet, but and if it doesn't do it today, then this demand zone might even be off limits at that point. Because what is this? This is nothing more than a higher time frame chop zone, isn't it? If we look at that whole price action, okay, let's go to a daily. Yeah, it's just nothing more than a big consolidation zone. If I turn on my master pattern indicator, drop it to a 4-hour, we're going to get just nothing but consolidation. These consolidation zones are chop zones. This is where people get chopped up. The basic idea is, waiting for a breakout and following it from there on retracements. So if I buy this demand zone in here, am I not just buying in a big higher time frame consolidation zone? Okay, 4-hour time frame. Probably am. And also the fact that that demand zone did not even, again, it did not break the structure. So even looking at this on a 4 hours time frame, okay, we're looking at this candle. 4 hour time frame did not break this 4 hour supply zone. Now, even if it still breaks through it, okay, if it still breaks through it, I probably still ain't very interested because, again, a strong zone will relatively quickly break through an opposing zone. But in this case, it hasn't. It's been over a day. Okay? It bounced into this zone during the 8 o'clock 4 hour block yesterday morning. Okay, and it just went sideways. So it has not continued through. So that really tells me that this demand zone, this 4 hour demand zone, even the 1 hour demand zone, is off limits. So what I would do on this case now is and let me delete that. If price does return back to the demand zone, here's what I want to see. Number one, I want to see this. Okay, the confirmation entry, something like that. But from here, what I would probably end up doing is just going down to like a 1 hour, go down to a smaller time frame and wait for a couple after it bounces in. If it bounces in, okay, I'm going to wait for a couple swing highs, swing lows. So a couple higher highs and higher lows, and probably just look at this thing on a smaller time frame, a 15-minute, a 5-minute, because I don't feel comfortable trading this zone on a higher time frame, expecting a big move. But I could go down to a smaller time frame and nickel and dime it to death. Diddle it in the middle. That's it. Don't diddle in the middle. It chops people up. It used to chop me up to pieces all the time because I made the joke on one of my shorts videos, I think a week ago or a week and a half ago, that when I got started and I learned what this thing called supply and demand was, I was trading every single supply and demand zone I could find. I was like a baby scorpion that didn't know how to control its stinger. Okay. That was me. That was me. If it had a pulse, okay, we all know the joke there, but everything had a pulse to me, all the supply and demand zones. So then I wonder why the hell, I'm like, at the time I was like, well, supply and demand doesn't work that good. It couldn't, because every single one of the zones I'm trading are failing. Well, that's why, because the bulk of them were inside of a chop zone and diddling in the middle. That's where it was screwing me. And it makes sense too. Again, we go back to buy low, sell high. What everybody hears on day one of figuring out, of seeing what trading is: buy low, sell high. Well, right here, if I buy that demand zone, am I buying low? No, because there's lower structures down here. And then ultimately, if we're looking at higher time frames, we'd be waiting for this confluence, which is my favorite. Now, if we get down here, if price comes all the way down here, guys, this is easy buy territory to me. I'm not saying it's going to 100% work out, but that is a hell of a lot more appealing to buy down here because of the higher time frame swing lows. Okay, if that zone doesn't work out, got another one down here on a smaller time frame. And I got a white line down there, so it looks like there's another one even on a smaller time frame. And again, a former support resistance line. And there's two lines there, which tells me there were two swing highs and lows fairly close together. So this is ultimately my favorite play because, again, going back to what I said at the outset of this chart, all this shit, man, this is all one big chop zone. And it's high on the curve. Okay. If this is low on the curve, then this is high on the curve. We break our chart down into thirds. Okay. Swing low, swing high, back to the swing low, and there's our curve analysis. And this is all in the top third. And then technically from the higher time frame, your middle is in here in this area. Okay. But this is the ultimate discount down here. And we'd obviously be looking at that on a daily time frame. Because on a daily time frame, that's where you see it. Okay, swing low, swing high. So just too damn expensive. Okay, Dow's too expensive. NASDAQ is the NASDAQ still has a swing high to break. See, at least on the Dow, it's just new higher each time. High, high, higher, high, higher, high. But on the NASDAQ, okay, higher highs, higher highs, higher highs. But then finally the October, so basically the Halloween high, Okay, that's where price got slammed all the way back down, but then we've had highs that haven't broken that high, if that makes sense. So basically, it's just kind of formed this, I guess you could say supports resistance. Okay, a little bit of a resistance ahead, but each time we've had higher lows. So is that nothing more than like a pennant or a triangle pattern? Is price not coiling up real tight? Okay, we're going to come to a head at some point. It's either going to blow down or blow up. Okay, that's a lot of energy being packed. But each time the buyers are at least making higher lows, but the sellers can't make any lower lows. Okay, the sellers are just stuck. They've been stuck there. So, yeah, my ultimate favorite play on NASI would be to get a breakout. Okay, breakout up here and then retrace to a brand new demand zone. That would be my ultimate favorite play right there, but it's not something that's going to happen probably in the next couple of days or so. It could. It could very well blow through it on Monday, Tuesday. Especially now if we're starting to get some strength to where it's back on our top setups. Remember the Dow, NASDAQ, SP, they've been MIA for about a week. Let's see here what we got. Want to be selling, but then it is against the trend. Exactly. Yeah, trend is your friend until the bend at the end. Okay, that's taught to us on day one as well, right? Oops. So yeah. Is there a 5-minute play today? Let's go look. Yeah, no thanks. No thanks on that. Yeah, that's it. There's really not a whole lot, I don't think. Because at this point, if we retrace on a smaller time frame, well, now we've got lower lows and lower highs forming, right? Because this right now is a lower high when we're looking at the 15-minute time frame. Okay, we got a high and then we got a lower high. So obviously, if we go down, we'd be forming a lower low. So now we're kind of, now we're kind of counter trend on the small time frame. So yeah, I don't like it. I really don't like the indexes right now. We might as well look at S&P, even though it's still neutral. Take a look at it. Okay. So swing high, swing low. Swing high has not broken the high. So same thing. This would be a smaller time frame type play. That zone, again, it looks good, just like the NASDAQ does, but there's just no trading volume or no trading activity. And we have blue candles. But just for kicks, let's kick it on down to a 1-hour time frame. Okay. Again, 1 hour, almost no trading activity. And it makes sense because that's in the Asia session when the US is asleep and drooling on her pillows. Okay. New York's out at really late parties, whining and dining their rich, wealthy clients that have flown in to give them money to invest. Okay. So they're not at their trading desks. Yeah, in 15 minutes, same thing. Just no activity. No activity on the S&P. And that makes sense. The S&Ps are the Asia traders are off trading other stuff. Gold, silver, Bitcoin, the Nikkei. Okay. Okay, top setups. What else we got? You looking at anything at the moment, Mr. Peeps? Any assets? If so, let me know. Let me know. Euro Swiss, New Zealand Swiss, Aussie Swiss. Go take a look at those since they are the top setups. Okay. So let me double check over here on something. I'm just looking at something off screen over here. Here's anyway, okay. All right, so Euro Swiss. Yeah, this was another one of those trades that I had missed on Wednesday. So on Wednesday, I hit a brick wall. I was so sleepy Because one of my challenges is getting to bed early. It's usually after midnight when I get to sleep, only to turn around and get up at 5. So on that day, very ironically, I took a nap, and that's the first nap I've taken midday in a long time. And sure enough, the one afternoon I take a nap, okay, that's the one day I miss out on a trade. I was really liking this 4-hour zone. Number one, it was the top setup, higher lows, higher highs each time. This was the demand zone closest to the origin of the strong move up, which was here. Okay. Had a gap. There's no gaps below. Okay. It's just nothing more than a wick. So that was your first demand zone in this origin of this strong move up. So this impulse leg, right? Baroque structure. The volume was okay. It wasn't the greatest. So that was a little bit of a -1. I would say -0.5. Gold's at the bottom of the range. Let's take a look at gold here in a second. Because I think it fell off the list, didn't it? Yeah, it's not on the list anymore. It's actually down to neutral on the Edge Finder. But anyway, yeah, I was watching this, and again, I just missed out on the trade. Just missed it. Now, honestly, it really hasn't been exciting. So it doesn't appear in hindsight like I'm missing out on a whole lot. But by the time I found out this trade was bounced into, it was already up here in this area. So did not want to chase it, obviously. So I just let it go. Okay. Did not want to chase. Now, for a minute, I was looking to see if it wanted to retrace down. But when I was looking at this volume on a 5-minute chart, okay, I mean, the zone looked nice. The expanded range candles out looked nice. But problem was there wasn't a ton of volume. So when I see a big move like this, okay, and if the volume is tiny, the trading activity, that looks like a false move to me. Okay, if it had gusto, it'd have a big VSA candle. And this is the same with volume on stocks or any other asset. If you get a big move like this on little to no volume, that's effort not matching result. That's Wyckoff theory. It's if effort has to meet. Gosh, I can't talk today. Effort has to match result. If you get a big move up, you should expect to see big volume. If you get a little move up, you should expect to get little volume up. But when you get a big move up with very little volume, that's a fake or false move. Okay, that's not anything worth putting a lot of money on. So whenever I saw that, even on a small time frame, that told me I'm just going to let it go, because even if it does retrace, I'm not too excited about the lower time frame prospects of that zone working out. Okay, so anyway, I stayed away from it. It never did retrace. It did start just kind of taking off, but it really hasn't looked exciting. So even though I missed out on getting in the trade, I think I'm fine with it. Now, yes, it did make a 3-to-1, 4-to-1, but I would have expected it to go on up here. Actually, yeah, let's measure that out. Okay, let's just say we put our stop loss down in this area. We'll just call it 10 pips. 10, 20. Okay, so 2.5 to 1. 2.5 to 1. Okay, 2.5 to 1 reward that it's moved so far. So by the time it would have gotten to 1.5 to 1, that's where I typically like to take my stop losses to break even. So yeah, assuming I got in that trade, I would have still been in it, but with at this point about 7 pips to show for it. Okay, that's I'm fine with it. And then not only that, you do have this overhead supply zone to worry about as far as a potential reversal or bounce. Okay. So demand zone buy, supply zone, sell just ahead of it. So that was a play. But anyway, that's about it. There's nothing else for Euro Swiss. This zone already touched down here. So I'm going to delete that, get it out of the way. And we'll get that colored light green. This is just too much wicks. this is kind of ugly price action down here. You got a lot of wicks. You don't really have any expanded range candles. So I don't think there's any really good demand zones at all, really anywhere down in this area. Okay. What do we got on this on a 5-minute? We already saw that. That's right. Yeah, remember that was a 5-minute demand, but there was no trading activity. So anyway, I'll take a break from the currencies and let's go take a look at your gold over here. I was just curious to see because I haven't even looked at the metals this morning yet. Okay, 4-hour time frame. So yeah, this is very similar to that first asset or two we were looking at. Consolidation all the way up here at the top of the curve. Okay. If you wanted to draw up your curve analysis on gold, I would be, let's go to a daily. Yeah, I mean, I would basically be drawing from this low to that high. Okay, so higher time frame, we're clearly high on the curve. Now, what if we dropped our curve to a 4-hour? Okay, for the 4-hour, I'd be looking at this swing low here. So let's just take that and move it here. Okay, so there's our 4-hour curve. Same thing, we're still in the top third of the curve, right? Now, down to the 1-hour, I'd probably honestly keep it the same. I wouldn't really want to move it to this swing low or this swing low because you got, we had a pretty sharp move into that. So yeah, even at the 1-hour time frame, we're still in the top third, which means the premium zone, the sell zone. Okay, if anything, I'd be wanting to sell it, but obviously I don't want to be selling gold right now. Nobody does. Nobody should because it's just been parabolic for the last year and a half or whatever. So that's why I ultimately have my demand zones down here in the discount zone. Okay. 4-hour demand zone, gap. 4-hour is also inside of a daily demand zone, which is my favorite all-time confluence. We're looking at this candle here. Let me get rid of the drawings for a second. Looking at this candle here, okay, as the base or as the origin on the 4-hour time frame. Now, again, the origin is actually down here because this is the swing low. But we were looking at it from a 4-hour perspective. Okay, 4-hour curve. So I like this area. I got to admit, the volume is okay. I wished if I had my ruthers, I wished it would have broken the structure over here, but it took a couple, 3 days to do that. So that automatically is -1 point in my head. Okay. That's one odds enhancer I don't have. But I do have big discount because it's at the bottom of the curve. It's got my daily 4-hour. The volume is okay. Yeah, that's it. That might be a play for next week, assuming the edge finder gives us a bullish score. 44.14 for you. Yeah, exactly. I have a line drawn up at 44.14. Why is that? Oh, I think that was from back here, though. That's an old line. I'll leave that there. I will leave that there. We'll call it Mr. Peeps line. And we'll see if we get, there you go. We'll see if your line gets tapped here in the next week or so, Mr. Peeps. All right, we got that saved. We might as well look at silver since we're here, and it's probably going to give a similar picture. Yeah. So here we go. 4-hour. We had that decline on Wednesday when Trump came out and said that Iran was not going to hang their people or shoot their people or whatever. I mean, it's kind of dark to have to come out and say that, but whenever he mentioned that, that's when this candle kind of retraced. Okay, because as always, people, gold and silver thrive on chaos. So if he's now coming in on that day, of course, you guys know how things can change within 5 minutes. But as soon as he mentioned that, people sold off. Oh God, don't do that. You will be cursed. Hey, I didn't say I was going to buy from there. But I do that from time to time. Somebody mentions a line, I like to just throw it on just to see, see what happens. Don't worry. It's just I just like to do that from time to time. Silver. Yeah, silver really, this play has already been touched, right? We already had this bounce here off this zone. Bounced into this supply, as you can see. Okay, the smart play on this would have been obviously a stop loss under here with a take profit in that area because you're about to bounce into the supply zone. That really would have only given you about a 2-to-1. I prefer 3-to-1s minimum. So as always, if I measure the zone itself, I always want to take that times 3. So let's call that 145 times 3, 15, 30, 45, 450. Okay. And we didn't get that because that would have been my 3-to-1. But as you can see, it only went here. So it only went about 2-to-1. That's why I ignored that. Okay. And that's expected. Okay. When you buy into a demand zone, it's always expected that you're going to get a reaction from the overhead supply zone. Now, oftentimes there'll just be a slight pullback and then continue. But sometimes, like this case, it can take away all your unrealized gains. So that's a big reason why I have to see break structures. I have to see a demand zone take out an opposing supply zone and vice versa. Okay, if I were to be shorting this supply zone, I'd want to see it take out a demand zone, which in this case, it really just kind of came back to this 4-hour demand zone, right? So in either case, I wouldn't have sold it. I didn't want to buy it. I didn't want to sell it, regardless of which way the edge finder was telling me it was going. Because this is just where contractions take place. This is where buyers and sellers temporarily agree on price when we're talking about a little bit higher of a time frame. Okay? Those are expected to kind of create consolidation zones on the higher time frame. Don't want that. And that's why I looked for at least a 3-to-1. It's got to pay me for me to get out of bed for it. It's typically got to pay me at least 3 units of the 1 unit I'm risking. And if it doesn't, then that just means we're likely going to be looking at a consolidation. So that's that. Let's see, 7:30 a.m. Let's go take a look over here. Okay. I was just looking. That's right. Yeah, we don't really have anything of note. 9:50 my time. So here in about 2 hours, we'll have the first of our Fed FOMC member speakers. FOMC member Collins, Bowman, and Jefferson. What's Collins speaking about? Deliver opening remarks at the Outlook 26 New England Economic Forum in Massachusetts. All right. So she's up there having a tea party, it looks like. What about member Bowman? Mr. Bowman or Michelle Bowman or Bowman? Michelle Bowman. Yeah, that's right. Okay, so she's up there having a tea party as well in Massachusetts. What about Jefferson? I assume all 3 of these are at the same one. Oh, no. FOMC Jefferson is speaking in Florida. Economic Outlook and Monetary Policy Implementation, blah, blah, blah. American Institute of Economic Research. Monetary Conference in Florida. Yeah. Sounds like more 3rd grader stuff I'll have to decipher for Monday. Right. So there we go. Not a whole lot on the front. I think, if I guess about the easiest way to talk about today is just nothing more than a little bit of a continuation from what we had earlier in the week, which if we recap the week, okay, we had the good unemployment numbers. Now the dollar did raise up in outperformance, okay, according to the speed gauge, the economic heat maps. Okay, we'll take a look at that again here in a second. But yeah, retail. So yeah, it was overall pretty decent week for the dollar. I mean, the inflation number, okay. The inflation number was a little light for your inflation. So both of your inflation metrics, CPI, PPI. So for the dollar, that's technically bearish, but it's good for our stock market. It's good for our pocketbooks over here in the States, right? So it's just one of those double-edged sword reports. No matter how this report comes out, it's always going to be slightly good for one or the other, right? And slightly bad for the other. We're talking the currency itself and then the stocks and our pocketbooks. Okay. I like to say our pocketbooks because that's really the easiest way to think about that. But then other than that, we had a good retail sales number. Okay. Good core and core and regular. And then the unemployment claims. This was a dashing number. I mean, this was great. It was great to have a sub 200,000 number. Okay, they were even after they forecasted it to be higher than the previous. So think about that. They thought it was going to be 7,000 higher. Oh, they revised it. So yeah, there you go. They had 8,000, but they revised it to 208,000. It looks like. So 7, 8, 9, 10. 8,000. So they expected an 8,000 higher number, but in fact got a 9,000 fewer. So that was an awesome number for the jobs, for the unemployment claims. Okay, the jobless claims. So you package all that together, it was actually a rather good week for the dollar. Not bad at all. Let's go look at that. Let's go look at the US dollar over here. It should be like 58%, I think. Yeah, 58%. So bullish retail sales, neutral on the inflation for the year-over-year number. Let's see here. Bullish on the PPI. No, bullish for the currency. And then your wage growth. This is within the last 7 days. So last week, wage growth, unemployment. Then the only negative one was the non-farm payroll. Okay, within the last 7 days. But again, that jobless claims number flipped because this was bearish, the previous report last week, okay, last Thursday. But now we got a bullish. So at the moment, we flipped because I think we were at 45% yesterday before that employment number came out. So it's still not a hot currency, but it's better than it was. So let's go look at the Dixie. Let's see what the Dixie's doing. What you got over here? Pocketbooks. Yeah. Yeah, well, my father's from Tennessee, a southern state here in the U.S., so I got a lot of good old boy southern lingo just from my roots. The southerners, the hillbillies, right? That's what they call them. Call us growing up in Tennessee. So yeah, pocketbook, that's just one of those words I never shook. Because now a wallet is a digital wallet, right? That's what people think of these days. So, yeah, kind of stuck in a time warp in that aspect, I guess you could say. Dixie, what's the Dixie up to? Recap the week. Okay, the Dixie's been up for the week as a whole. Okay, we had our swing low the day before Christmas on the Dixie itself, which makes sense because we had bounced into this demand zone over here, did we not? We bounced in once, a little bit of reaction, bounced in twice, and that's where it caught a bid and moved up. Okay, Friday, Thursday, Wednesday, Tuesday. Yeah, I guess we're not too high. We're not too far from where we started because the top of this candle here, okay, that's where we opened up on Monday. So we opened up here, big drop, and then just recovered ever since. Okay. Now, the important thing that I think on the Dixie is the fact that we broke this supply zone. And that's why, okay, this is why it basically paused, in my opinion, is because it bounced into this supply, this daily 4-hour supply. Okay. But ultimately it chewed through. So that to me shows some strength on the dollar. I know it's only a 58%. Okay. And at this point, I'm just going to delete that and move this out of my way. But I'm just going to color it black. That way I still know, while price is in this area, I still know, hey, it did chew through that overhead supply. So our next stop is this supply zone up here. So I think we got some room on the buck to be going up a little bit. Okay, if I had to put money on it from a technical aspect, right, how would you enter silver? Good morning, Rodrigo, by the way. Silver, let's go take a look. Now, silver is a little bit on the neutral side for me. if I go to my top setups, but only plug in the neutral items, silver itself is, where to go? Down here like a 0 or a 1, I think. Silver. Where is silver? Why am I not seeing silver? Huh. Where the hell did silver go? Did it pop back on the list? Oh, okay. Silver +6. Okay. So we are getting a bullish score. It just changed. It changed since I updated. So silver is giving a bullish signal. So it's looking good on the trend as far as your daily 4-hour trend goes. The seasonality, the month of January, this thing's typically over a 10-year period up. Okay. COT report, which, by the way, we do get our new copy later on this afternoon. So on Monday, actually on my Sunday video, I'll talk about the commitment of traders so that we can take a look at where the big banks ended up positioning themselves for the week. Net long, net short, all these assets. So I really like that COT report, guys. At the end of the day, who makes the money? The big banks, the insurance funds, the pensions, okay, the hedge funds, the whales, the big boys, the smart money, whatever you want to call them. They're the ones that make the money. So my goal number one is always to find the direction that they're going and ride their coattails. And that's, for me, where supply and demand comes in. So, but anyway, yeah, back to silver. Okay, COT. So as of the recent report, they were net long silver. Crowd sentiment is short. GDP, that's one item that's going against the bullish narrative. So is the services PMI, retail sales, PPI, interest rates, unemployment, and unemployment claims. But it's being buoyed by the technicals and by the sentiment analysis, guys. Technical analysis, sentiment analysis is looking really good for silver. The fundamental analysis is just giving us a mixed results. Okay, it is being aided by the positive manufacturing PMI data towards silver, consumer confidence, the Fed's favorite gauge. Okay, the personal consumption expenditure, the non-farm payroll, the ADP numbers, and the JOLTS numbers. So you add it all together, it's a +6. Let's go look at it on a chart. Again, we did have that little bit of a sell-off whenever it sounded for a minute like Trump may not bomb Iran. Okay, when it came to Iran saying, "Hey, we're done. We're not going to kill our citizens. Okay, everything's back to normal." They've said that for the last couple of days. Everything's back to normal. Nothing to see here. Okay, so we'll see how much of that is true or false or whatever. But at the end of the day, all we care about is price action. Okay, let the hot spots, let the geopolitics take care of themselves. I'm not here to talk about that because number one, all it does is starts arguments, right? But number two, it doesn't really matter. We want to know about it though, because that tells us if we want to avoid a setup. Okay, when Venezuela or when the U.S. is taking oil from Venezuela, okay, you guys know that oil is going to be just going crazy. Okay, and it has. I mean, it had that big spike up, and now we've been retracing. So it's just unpredictable. But back to silver. Ultimately, my favorite play, and it's not going to happen today. It's not going to happen necessarily the next day or two. But ultimately, I prefer buying silver down here because on this yellow box, that is my daily demand zone. If I just turn my drawings off, okay, there's my daily demand zone right there because this is kind of the origin of this strong move up. Okay, just looking at this most recent swing low. So there's my daily demand. Flip it down to a 4-hour. And turn my drawings back on. Okay, now we're on a 4-hour. Okay, and then we've got a 4-hour zone here. And in both of those cases, I have a gap, a fair value gap, acceleration gap, runaway gap, pro gap, whatever you want to call it, right? So that's my gap on both time frames. But down here, looks like we got an alert hit, so we'll take a look at that in a second. I just realized my volume was all the way down. Interesting. But anyway, on the 4-hour time frame, this is the only demand zone. This is the only demand zone that has a gap. If you look down here at these candles, okay, which goes back to the origin of the strong move, that's efficient price action. Remember, the banks like to find inefficiencies in the market and exploit them. They have no interest or typically have no reason to go and attack an efficient market. Okay. So what do I mean by efficient? It means if you look on any of these candles to the right or to the left, at least one of them is touching a wick or a candle body 2 candles over. Okay. So this candle here is touching this wick on the second candle over. This candle here is clearly touching the wick and the body. This candle here is close, but the top of this wick is touching the bottom of that candle there, the second candle over, right? And this is the first example where that does not happen because the top of this wick does not touch or overlap the bottom part of this candle. So that's our gap. So when I see a gap, all I do is wrap a rectangle around the candle just below it. Boom, right there. So there's my inefficiency in the market. There's my demand zone with potential unfilled orders. The demand zone broke a structure. It also broke, the structure and / former resistance lines, as you see over here. The leg out candle volume spread analysis grew, so that told me some institutional activity was taking place on that leg out. And then now it's just a matter of waiting for price to come back down. Okay, and not that I'm too interested in the fibs, but since I'm here, I'm just going to take a look and see, is that anywhere near the 61.8? No, that's too high up. So this is, though, the kill zone. There's a kill zone. That's something you guys can look up on your own if you want, but there's a fib retracement method called the kill zone where they utilize a 71 to 88% retracement. It's not something I dig into. I drew it up there. It's part of my fibs just because a friend of mine used to use it a lot, and he swears up and down by it. So I just like to keep an eye on it. But it's never a reason for me to buy or sell anything. It's nothing more than a filter. So that's why I don't really, dig too deeply into fibs, because fibs are not showing unfilled orders. I care about unfilled orders. So yeah, really to answer your question on the silver, I wait for price to go find a retracement back to a patch of unfilled orders. So for me, the unfilled orders are going to be right here because of the inefficiency just ahead of it. And not even worried about this part down here because it's an efficient price structure. Again, candles overlap candles, to the left and right. So up here though, all this stuff's a little pricey. You see, I drew up a demand zone up here, but that's on the smaller time frames. But that zone did not even have the strength to bust through this overhead supply. Okay, so this was a 1 hour demand zone I was watching, but it did not even have the strength. It didn't even have the strength to get to the supply zone, much less break through it. Okay, it got up here and retraced. So it only moved 2 units to. If my risk is 1 unit, this is what I was pointing out earlier. If my risk or my zone is 1 unit, okay, that's 1 point. We'll call it 145. Okay, 1.45. I need to see 1.45 times 3 above it. So let's just call it, 1.5, 15, 30, 45. So I need to see it go 4.5 up. And there's your 4.5. Problem is it didn't make it before it retraced. So automatically that disqualified it for me. That's why I avoided that. Now, some of these other zones that I drew along the way here worked out. You guys can see them. This is the skeletons of them, right? I drew this demand zone up on a 4 hour at one time, it looked like. Let's go look. Yeah, 4 hour. Okay. It hit that, and then it priced back in. The wick came down and touched it and took off. Same thing happened here. I drew up this 4 hour zone. As you can see, price came down and wicked in and took off. So that's a couple demand zones that did work out. But with this one, again, I'm just not interested in it because it did not even have the strength to break through the overhead supply zone. So that's requirement for me. Break a structure or break of supply zone, whichever it is. In this case, it's both. Okay, if this price would have done like it did here, but kept going and broken up here and then retraced, then that would have been a buy for me, a buy to the long side. But we did not see this action, this price action. Okay, it fell short. So yeah, there's no play for me on silver at that spot. And And if I if I look at this demand zone down here, guys, this is a zone I drew up way back when price was in this area. So at this point, I need to delete those, because if price starts going down now towards these smaller time frame zones, number one, the reward to risk at all on this top one. It looked okay on this one over here on a smaller time frame, because from the range of this bottom zone, I mean, if you multiply that by 3, you can clearly see that we made at least 3 to the top, right? So the bottom one was fine, but this one I only cared about for a minute, partially because you see that blue dash line. That was a former support or resistance line on a higher time frame going through the heart of that demand zone. So that's a lot of lingo, but at this point, I'm not even interested in that zone, and I'm really not even worried about interested in this one either. It is a narrow range for how far down price has to come. Again, this demand zone was appealing when the price was back here. That's when I drew it. But now that we've gone this far, now if we reverse and come down on silver, now we're starting to make higher highs, or excuse me, now we're starting to make lower lows and lower highs. So we're starting to turn it into a counter trend play, because you're going to have lower lows and lower highs to get back down to this smaller time frame zone. So I'm going to delete it. That way it does not tempt me. And we'll wait for the higher time frame confluence. You didn't want to short it. Hell no. Look at this. No, hey, good question. But if we're looking at this thing, if we're looking at silver, is this thing going parabolic? It's going parabolic. I mean, obviously, right? The volume is growing. This is a weekly chart. Okay. Volume is growing as it's going up. Now, this is basically, look, at some point, yes. At some point, it's definitely going to retrace. There's no question on that. But this whole area, okay, every one of these weekly candles are littered with short sellers that blew their accounts. Okay. You had shorts thinking they were a hot ticket there for a week here, only to turn around and lose it. Okay. You had shorts here for this week before price balanced out and wiped them out. Same thing here. Okay. In this candle on some daily time frames, you had shorts thinking, oh boy, we caught the top because it's a double top. Okay. They felt good for a minute, but then what happened? Next week opened up, they got squeezed. This is nothing but short squeezes. Same thing here 2 weeks ago. Okay. Back in the last week of December, right? You had shorts stepping in. Okay. It's the end of the year. Everybody's gotten their profits for the whole year. Last week of the year, what happens? People come in and short. Maybe they're squaring up their accounts, getting ready for the new year. So they short it, only to turn around first couple of weeks of the year and get short squeezed. So no, there's no chance in hell I would be interested in shorting this. The only time I would want to short gold or silver is if I start seeing a series of lower lows and lower highs on a small, on some higher time frames. So you clearly see that demand zone. I need at some point to see, let's just say we put in a low here. We get our bounce, right? Which is the play I would want to do. For me to look at shorting this, I would have to see a new high. Okay, we'll just throw it in here. And I would have to see a failure of this demand zone. Okay. So at that point, now you've got a lower high and a lower low, right? If we can get a retracement from here, from this point, after we've established a lower high and a lower low, from this point, I would look for a potential short in a supply zone somewhere along this impulse leg, because this would now be an impulse leg. The important thing to look for with reversals, okay, potential reversals, is did we have a break of structure to the opposite side, and did it create an impulse leg? Impulse leg just simply means break of structure. So in this case, break of structure, break of demand zone, and then I would be looking for a potential, again, a supply zone somewhere in this area to short to the downside. But until I see something like that, I've got no interest in shorting this market, because it's nothing but higher highs and higher lows. Would you agree? Now, smaller time frame, it may look a little different. Okay, well, not on the 4 hour. 1 hour. Okay. I mean, you could squint your eyes and say that's a lower high. You could squint your eyes and say we've broken this low. But again, that's too small a time frames. We need to be looking at this stuff on a higher time frame. And you look at the monthly, the weekly, the daily, okay, 4 hour. This is all higher highs and higher lows. So from a technical perspective, man, just be careful. I wouldn't be shorting it until it proves itself to me. You're welcome. You're welcome. You're welcome, Rodrigo. Very welcome. So anyway, guys, that's about it. Let's see. What's the last thing I wanted? Oh, yeah, shorts. Swiss yen, pound Aussie, guys, and then we'll get out of here. Swiss yen and pound Aussie shorts. So the Swiss yen just popped on the list. Swiss yen, where you at? There you are. Okay, 4 hour time frame. Let's go to a daily. So nothing but higher highs and higher lows, right? This is similar to the silver. My system tells me that it's giving me a bearish signal. Okay, -6. That's anything -5 or lower is bearish. It's giving me a -6. But my chart is not giving me permission to time a trade yet because it's higher highs and higher lows on a daily, on a 4 hour. Okay. For me to get excited about the possibility of trading this thing, I got to see a break of this demand zone area here. And then a lower high. So let's just, draw it up. We basically want to see a break of this demand zone anywhere down here. Okay. And then a retracement. Let's just call this a supply zone. Let's just say it wants to catch a ask there. And then when we break this structure at this point, this structure here, now I'd be okay with looking for a potential supply zone in this impulse leg. Okay. That would be my play for the short here. So basically my trigger would be right here after we form a supply zone somewhere in this area. Okay, that would be a potential supply zone. But the important thing on all this is we broke this structure. We broke the bottom of this demand zone, okay, which is this leg here. And then we have a lower high. And then we break this structure right here. If we can break those couple structures and we get a new supply zone formed anywhere in this area, or you could even look at the 61.8 of a fib retracement, guys. There's people that do that too. Okay. Oops, that's the wrong one. So let's just say you did your fibs like this. Okay. There's your upside down fibs, right? Look at that. I drew that perfect. Years of drawing zones. See, I was going for the 61.8 level and I drew the proximal line on it perfect. So that would be an example of, where I'd want to short this. I just don't want to do it when all I'm seeing is higher highs and higher lows on the Swiss yen. Okay. Are you a multi-time frame trader? Yeah, man. I typically look for the demand zone that has a gap above it at the origin of this overall strong move up. So there's your daily candle. Just simply wrap a rectangle around it. I have to see an expanded range candle coming out of it. I like to see volume increasing, and then I like to see this break a structure. So when it breaks that structure, then that tells me that's a nice demand zone on a daily. So for me, the next step is very simply to drop down to a 4 hour. Okay. Go back over here to the same area. And I now need to see a 4 hour demand zone with a gap in here. So there's my 4 hour demand. Okay. I can't use that one because it's already been touched. It's already been mitigated. This is the first demand zone on a 4 hour that has a gap. So from here to here is my gap. It's not a great looking gap, but it is a gap nevertheless. So when I see those expanded range candles going out, when I see the runaway gaps left in its wake, when I see breaks of structures on that zone did, and when I see decent volume increasing as it's going up, that tells me that that's a pretty good zone. Oh, sorry about that. Yeah, my charts tend to do that. Let me just pop it back on real quick. Yeah, my charts, for whatever reason, they will just kind of hop off every now and then. So yeah, just to go back real quick, and then we'll get out of here. just going back over here to this zone that I was using as an example. Okay. We already established the yellow is, I always write up my daily zones in yellow. It's just my color coding preference. But then we drop to a 4 hour and we got this 4 hour demand zone inside of it. So this is what I call daily 4 hour confluence, just simply meaning I have daily time frame traders looking at that price point. And now I've got 4 hour time frame traders looking at that point. Who likes those higher time frames? The whales, the banks, okay, the hedge funds. They're not typically messing around on a 5-minute or a 15-minute chart. Okay. They're not. They've got algorithms for that. Right. But as far as their proprietary traders and all the big wigs, right, they're looking at daily charts. They're looking at the higher time frames. They're not looking at the small ones. So I want to look at what the big banks and the smart money are looking at. They're looking at those areas. And again, that's a strong area because it broke a structure. Okay. It broke this form of resistance. And it had a gap. So that was the first gap. Nothing down here counts. To me, this is all efficient price action because candles overlap each other. They all overlap. That's the first time something does not overlap, is right here in this gap. Again, we take the drawing away. It's this wick to this wick, right? We ignore the leg out. And now that I look at this on a 4 hour time frame, or I got to tell you, the volume doesn't look the greatest. The volume spread analysis. So this very well could be an example of Wyckoff theory, law of effort and result not matching up. If I see an expanded range candle like this, I need to see the volume growing. I mean, you could say it grew relative to the previous candle, but I like seeing yellow candles. Okay. Yellow candle just very simply means that's higher than normal activity of the recent candles. I know that's a mouthful, but basically unordinary trading activity. Okay. When I see a leg out candle, I prefer that it's going to be yellow or red. Big money stepped in. Right? So anyway, yeah, that's the one knock on that zone, but that's basically it. Daily 4 hour zone confluence. On retracements, I like to get sometimes a confirmation entry. Okay, a series of a break of structure to the upside in the case of a demand zone. So I'll just end it on this. When we hit the zone, okay, right here, I need to see a break of this structure. Retracement back to a newly formed demand zone on a smaller time frame. It kind of looks like an upside down. I don't know what you want to call it. But the important thing is we break a structure right here. Okay, we break this structure, and then price comes back to a newly formed demand zone, a smaller time frame. That's after it's hit the higher time frame demand zone, by the way. So that's my play. That's a confirmation entry. Confirmation entry right there. That's my play after hitting a higher time frame demand zone. Okay. So that's all I got today. Hope that helped. I'll be back on Monday, of course. I'm always here in the city. I always do my streams for about an hour and a half. Sometimes like today, I go a few minutes over. No big deal. But yeah, I'll be back. So happy trading the red folder events, guys. So today should just be pure supply and demand plays. Just regular price action. I don't think we have anything else major to get in the way today. Again, the only thing we had was Governor Bailey flapping his lips this morning, and it was just a big nothing burger. So easy a third grader could do it. And take care, everybody. Stay safe. We'll see you Monday.